think my friends reflect the various facets of who I am or who I think I am. And so some of them will tell you that I have this desire for perfection. Not at all true, but it may be perceived as that. Others will tell you that I'm creative, yes, because I cheat at games, but that I'm also creative generally in terms of art. Again, I don't necessarily think that's accurate, but I can see why they may believe that. And then there are those who say I'm a little too serious, that I'm a little too focused on work, that I'm a little too much of an A-type personality, and that sometimes I just need to roll it back. I think that's true in all of the cases. I love my job. I love anything that I'm interested in or passionate about, so I give it 110, and I expect everybody to see it the same way and give it maybe 120, since mine is the minimum amount you should be given. But yes, and the other one is really a function of my early experience in terms of my early mentors, which is that while the big picture is important, it's the details that matter, and so you have to focus it. This was really an accidental path. I was a science student. I loved science. I love biology, actually. But when I went to university, I decided I was going to do business. So I went into society. Loved econs, did a class with Mr. McLean, Mr. McLean, discovered that I really loved economics, and I'd already sent it to do an accounting degree, so I kind of had to do a double major, and joined the central bank immediately after school as a research economist. I love monetary economics, and my first supervisor, if you want to call him that, and mentor, is really what he was, said to me, if you wanted to know and understand the economy, you can't just look at it from the top down. You need to actually understand the institutions in there. You need to understand how intermediation really occurs. And I'm like, yeah, because when you're young, you think you know everything. So I asked for a secondment onto bank supervision, so I could understand essentially institutions, financial institutions at the kind of operational level, what went into managing a risk, and why is it that exposure to credit risk can have run-on consequences for the economy, and those kind of things. Discovered that I loved it. I loved the policies around it. I loved the fact that being a bank regulator allowed me to give something back. I think all of us want to be able to do that. All of us want to know that what we do is important for this world and it makes a big difference. And as a banking regulator, that is what I felt was my calling. I joined and never left. So I've done regulation for many types of regulations. I've done bank, securities, insurance. I worked in Bahamas actually as a securities regulator. And at first I was terrified, because you think, I'm a banking regulator. What do I know about the securities business? But the principles of regulation are actually the same. And so I loved securities regulation. When the opportunity came for me to join the FSC here in Barbados, I grabbed hold of that opportunity, because the FSC looks not just at the securities sector. It has a form of what we call deposit-taking institutions, which are credit unions. It also looks at occupational pension plans, and then it has the insurance sector. And here was a chance for me to develop as an individual, as a regulator, understand regulation in every single sphere, but also for me to contribute to the development. So the director in S&R, which is the Supervision Regulation Division, which is the core of what we do here at the FSC, really is a strategic lead. We're responsible for policies, we're responsible for coordinating with other departments, and also in terms of enforcement, looking at some of the bigger issues that sometimes get bubbled up that needed to be dealt with as part of the supervisory framework. My specific team focuses on looking at domestic insurance broadly, but certainly responsible for consolidated supervision within that sphere, as well as all innovative instruments and fintech and the mutual fund sector, which are our core responsibilities. You hear a lot of talk about financial sector stability, and you start to ask yourself, what does that mean? Really and truly, if the system is stable, you wouldn't know. It really means that all the participants in the financial sector, the banks, the credit unions, the insurance companies, they're functioning like normal. You are able to go and get access to financial products. If you want your money, you go to the bank, you get it out. You should see absolutely nothing. That is when a system is nice and stable. When the system is disrupted is when you start to see all of the challenges that are associated with it. The FSC, as I said earlier, part of our role, one of our key responsibilities, which is one we share with the central bank, is that of maintaining financial sector stability. There are many ways to do that. Part of that is our ongoing monitoring of the institutions that we regulate to ensure that risk management is being done well, to ensure that the entities themselves are profitable, but they also functioning, the internal controls are good, the risk management is good, that when they take your money and they invest it, that they're making prudent decisions about where they invest in that money so that the promise of the return can in fact actually happen. Right? It doesn't mean that we can stop an institution from failing. That is not the purpose of regulation, but if it does fail, that it feels orderly, is the right word, where it manages, it exits the system orderly, it gives you your money back, and the system continues uninterrupted. So that is really what we talk about when we talk about financial sector stability. If you go on the FSC's website, you would see that we are practicing something called risk-based supervision, and you may wonder what that means. In regulation, you tend to hear about compliance-based regulation, which means you've gone to the legislation and you've checked to say if they submitted something, that they've actually submitted it. If they're required to do something, they're required to do it, and they've done it. But regulation has evolved beyond that. Regulation is now what we call principles-based. And so it sets a tone for what the expectations are around good risk management. It's not just guidelines from the regulator or legislation that guides how an institution should function. It also includes international best practices. Now that's a lot of stuff, right? What we do when we say principles-based, for instance, I will say to you, this is how you ought to be managing risk, but you have to make sure that it's proportionate, because risk management in a very complex institution looks quite different to risk management in a very small, very simple financial institution. If we are going to be checking all of this as you would expect your regulator to do, then you would say, oh, well, the regulator should have really a lot of staff and a lot of resources. And risk-based is recognizing that it's about the efficient allocation of resources. It doesn't mean that we don't look at everything, but we look at the higher risk first. So an entity that's large and complex or engaged in risky behavior may utilize more of the regulatory resources, and so we may meet with them more frequently, discuss issues with them on an ongoing basis, and maybe not meet as frequently with an entity that is well managed or is small or not complex, and that is really and truly functioning fine. So it's really about allocation of resources, but it's not just about allocation of resources. It is very data driven. What it means is you have to have the information to understand what is happening with your entity, what is happening out there in the system, and using that data to inform your judgment. Now that sounds fancy, but what it really means is I understand what's the performance, I can see where the issues, there's something called a material change. It's just not the financial numbers, it's also the qualitative data. You may have had a new CEO in place, you may see things happening that the internal audit report says that there are a number of issues, and then you know that, well, okay, fine, based on the data, there are potentially heightened risks within this institution, and so we need to allocate more resources just to discuss this and to manage this down, as opposed to data that then says that this entity is functioning normally, right? And so it's just ensuring that entity is following its strategic plan, and that its performance are in line, and that its management has oversight, and its board, who has the responsibility for risk management, is adequately doing its job. So its governance is good.
The Financial Services Commission licenses, supervises, and regulates non-bank financial institutions operating in Barbados.
My pension plan at work.
My insurance and securities.
My credit union.
We are proactive.
We monitor for compliance, and we act in your best interests to prevent breaches of the Financial Services Commission Act.
The Financial Services Commission, helping to promote a fair, safe, and stable financial system. Learn more about us at fsc.gov.bb.
The Financial Services Commission, gatekeepers guiding your way. FSC is here to stay. Integrity, excellence, leading, that's right, for a stable future shining bright. FSC, we stand for you, keeping finances strong and true. Insurance, pensions, securities, and credit unions too. With FSC, we'll see it through, building trust in all we do. Regulation that's fair and right. With FSC, your future's bright. FSC, we see it through, building trust in all we do. Regulation that's fair and right. With FSC, your future's bright. FSC, we see it through, building trust in all we do.
something that you're interested in watching, but this is important. Hi, I'm Denise Hinds-Jordan, and you are watching FSC Speaks. Because risk-based supervision essentially allows us as regulators to tailor what we call prudential requirements, which is capital requirements or liquidity requirements, specifically to the institution given its size and complexity, it has a lot of other benefits as well. Risk-based supervision allows policyholders of your insurance, use of insurance products, if you're a user of a deposit-taking product so that you have a deposit with a financial institution, or even if you just have an occupational pensions plan, it protects you as the consumer of financial product, because it gives assurance that your regulator is actually looking at the key risks where the risks occur and not just teaching everybody the same brush, right? It allows the regulator to target and to share with the industry. So this is actually really good for the industry, what our expectations should be, and what, not ours as in Barbados only, but what our international expectations around risk management and internal controls and other control mechanisms that you should have in place to run a financial institution of your size and complexity. So this year, the Commission is focused on a number of strategic initiatives, and a number of those initiatives also are key for the function of SNR. If I can just focus in maybe on two of those, because they're somewhat related. We talk about a future fit organization. Nice way of saying that, we want to make sure we have the appropriate people in place to do the best quality job. That requires looking again at our staff, making sure we have the correct number of staff in place, but they also have the training. The Commission took a very innovative move very, very recently when it restructured its organization. Previously, we operated in an insurance division. People say silos, but I don't want to say silos because we sat together, we talked together. But we definitely had sectors. We talked about this is a credit union sector, we talked about insurance sector. What we've done is remove those artificial lines. They no longer exist. You have a team, and that team has experts in a number of areas. And so as an institution, if you are focused in both insurance product, but you may have as part of a group where there's another group that does mutual funds, you're not talking to two different people at the same institution. You're talking to the team that is responsible for you as the group. Right? And so you're not constantly sometimes trying to share an understanding of your entity as you speak to different persons. That removal of the artificial barriers, if there was such a thing, or Chinese walls, means that we have to ensure that everyone has knowledge in every area. And so while we have experts in specific areas, we know how to cross-train. So training in SNR for us is very, very critical. The other key thing that we're involved in this year is talking about SupTech. So as a financial institution ourselves, and as a regulator, we need to be able to use the technology better, right? And the technology allows us to be better regulators, to serve you, the public, better, but also to serve our registrars better. There's something called SupTech. It sounds really exciting, but it simply means that we use technology to collect all that data that we use in risk-based supervision, to make some of that inferences for us, to allow us to look across the system at benchmarkings and to see when somebody is not in line with what is happening as a system issue, or when something is happening, the system is reacting to, for instance, you could have a change in economic conditions or macroeconomic policy in the US. It may have an implication for the value of a particular security. Persons will be interested in you having holding a large section of US dollar denominated securities. That in itself is impacting the valuation of that security, which then of course may have an impact broadly on the institution. And so you may see that institution's performance numbers go out of line with others whose investment profile looks different. SupTech allows us to get all that kind of information at a very, very quickly, as opposed to very quickly, and allow us to make quicker assessments and be more responsive. The development of fintech in Barbados has been significant in some ways in terms of improving payments, which is not something that the FSC itself has regulatory oversight. But we've seen increasing number of persons coming to us as a regulator and having ideas of how they can offer a product that we do supervise using these advanced mechanisms of delivery, which is how I tend to describe it, because sometimes the products themselves are very similar to traditional products. it's a security, it just maybe looks slightly different. But persons been coming and we've been sharing with them that in fact, because we have principles-based and we're moving towards a lot of principles-based, our existing framework does in fact allow us to register many, not all, many of the emerging products. And in terms of supervisory oversight, it works. It allows for that. At the Commission, when we first approached the idea of fintech, our determination was a very simple thought. Same risk, same oversight. So if you're offering a product that traditionally exists, then your oversight regime really should marry that risk. The fact that your mechanism for delivery of that product changes does not change the underlying risk and the level of governance you should have around it. We look at the perimeter of regulation, we look at what is emerging, and then we sit down and say, okay, what do we need to do to ensure that the financial system continues to function, that the level of financial inclusion that we desire to see actually can occur. Are there emerging risks that we do need to have to make sure that there's a supervisory or regulatory framework around? And that, of course, has led us to look at and have these discussions together with our sister regulator about fintech. What are some of the key challenges we see, and what framework together as the regulators within this jurisdiction do we need to have in place to ensure that there's full oversight of the sector? And so that itself is emerging. So when I think of success, I thought maybe it shouldn't be me who talks about the success of my team, but I should ask them how they felt about the transition and how they feel about how they have performed over the year. And there were two things they said that I think stands out. One of it is their recognition of how much work they have put in to come together, to pull together, to share their knowledge and work as one unit to offer service to the industry and to change the culture to more of a service culture. Yes, we're here to regulate you, and there are no questions about that, right? But it is also to recognize that you're a business and to give you the service that you demand and you ask for, and to recognize that we all have different skills and how we pool those skills together to just get this job done. And seeing them together, working together, for me has been a sense of pride. Certainly, I feel really good when I see it. But it was to hear that they also recognized how important it was for them and that they pat themselves on the back for that. The other thing that I think they spoke to is a change in the culture in the industry, and I think this is good for Barbados generally, is to recognize that having that engagement with the industry, and they're looking to have more and more engagement as part of our transition to as a regulator, is that they've changed a little bit of what we call compliance culture. And by this we mean that persons are recognizing that they have a responsibility to not themselves as an institution and to make sure that they make profit for them shareholders and so on, but they also have a responsibility to the consumers of financial product. And they themselves are willing to take prompt corrective action, and they understand that the Commission will ask that they take prompt corrective action and that they're willing to accept, yes, the change needs to happen. So I think they think that they have been part of moving that needle along, and they're very proud of what they have done to contribute to that, but also to the sector to recognize that it itself has to change. The skill set, we ask for finance skills like everyone else, but don't think that you need to come with an accounting skill to be a regulator. Regulation spans a large section of skills. So I have members of my team who are lawyers, and they have to learn finance as part of the job, but they come with one skill, and as I said, over the next 3 years they gain others. We have people whose primary expertise may be in pensions, or it may be in strategic planning, but then they learn other skill sets. So I tease that I started off as an economist with some finance skills. I'm now a bit of a bush lawyer, which is my joke to everyone else, because you have to learn the legislation, you have to understand the spirit of the legislation. You have to be a bit of an internal auditor because you need to be able to understand internal control environments and what you should be looking for. You become a strategic expert because you need to understand governance and what good governance looks like in different types of institutions, what good strategic planning looks like in different types of institutions. And so these are skill sets that you gain over the time. So it's about willing to develop, willing to grow in new areas, understand this is a continuous learning environment, that you're only as good as sometimes what happened before, and there's always room for growth for everyone at every level of this organization. That we're a team, so you have a family, right? And we're working together to achieve something, that you have excellent communication skills, and that, you're skeptical. You have to question a little bit. You can't take everything as given. So those are some of the skill sets we look for. And the last one I probably didn't mention, but I really should mention, it's about giving back. So I taught, and this is, let me say very clearly, this is Denise Hinds-Jordan's view. I once talked to another regulator, and she said when she talked to young persons, one of the key things she emphasized, and I've learned to recognize the value of what she shared, is that you have to want to do something that is bigger than you, that you want to give back, that you have a sense of civic responsibility, because that responsibility allows you to understand the import of what you do. You stand as the regulator in the place of John Q. Public, in the place of the grandmother who doesn't understand financial sector regulation, but has some money that she wants to put on a bank or a credit union or invest in an insurance product annuity. You have to ensure, you stand there to make sure that as she is having those discussions, that the market conduct, and by that simply means that the person who's selling that product, make sure that the product they're selling to her is suitable for her. That is your responsibility here. So stand in that place of, you can call it John Q. Public, you can call it the grandmother down the road, I remember at some point in time there are all sorts of things, but really about that fellow human being to ensure that the system functions and functions well for them.